4 major factors that can cause a major stock market crash, a recession, and maybe even a depression. Coming up. Hi everyone, this is Dr. Ernesto from Attaboycowboy. In this channel, we give you health and wealth tips to help you be more successful. Now, it's some very interesting times. There's a lot of factors going on in the economy. We're at a point in time in our economy where we've never had so many issues going on at the same time. And I'm going over a lot of issues with my economist friends, my finance friends, real estate investors, and even a lot of my healthcare friends. And a lot of these issues affect our finances. If you think about it, it's affected by environmental, political, financial, as well as health factors. So I want to go over my top 4 factors that I think are going to affect a lot of our personal finances right now and things we need to be ready for. Factor number 1, China locking down. What's going down in China? Well, China is going into a prosperity for all idea where they want to redistribute wealth, as most socialist countries or communist countries do. They're taking money away from big companies, they're devaluing the big companies, and they're redistributing the money. They're concerned about polarization of income, which is a good thing. It's good that they're redistributing the funds, that is, because it's not good to have people that are really poor and really rich, like you see in Brazil. Unequal income distribution causes a lot of societal problems. That's why when I go to Brazil, you see the rich people drive around in bulletproof cars, and then the poor people dying of hunger in the favelas. On the flip side, you have Taiwan, which is number 1 on the good side of income distribution. Everybody has like an equal, somewhat, distribution of wealth, and they don't have extreme poverty or extreme wealth, although they do have wealthy people. So China is trying to avoid that. The issue is that they don't believe in the same mantra that we believe in the West of the invisible hand, where we rely on market forces to redistribute wealth and government policies. They use sheer force. So they're going in, they're regulating all their companies so much, they've caused a major correction in Chinese companies and their stock prices. They're losing a lot of money. In fact, Alibaba and Tencent, the 2 biggest Chinese companies that were actually in the top 10 most valuable companies in the world, have lost over 30% of their market value, and they're no longer in the top 10. So they're losing a lot of money. So what's happening with all this? Well, think about consumer sentiment. There's consumer sentiment everywhere, okay? We're the same. People are the same. American, Chinese, Japanese, African, whatever. We're the same. So if they see the government doing all this stuff and crashing all their pension funds and all their investments, all that stuff, it causes a lot of fear. So when there's a lot of fear, especially with inexperienced investors, people start to retract and sell their stocks and all that stuff, which is the worst thing you could do. But it actually starts feeding itself and it makes it worse. All these people are losing their money. You know, China is a very nationalistic country. A lot of people are investing in Chinese companies. They're getting killed. They're losing their investments. So they're pulling their money out, which is causing them to go down more. They're going to buy less because when you feel like you don't have as much money, you're not going to spend as much. They're losing their money in housing. They're losing money in everywhere. They're going to be traveling less. They're going to be buying less products from overseas or investments and everything else. You'll see it even spill over into probably other real estate markets like California, where we have a lot of Chinese investors coming in to buy houses. If they're feeling poor at home, they might start selling off some of those investments so they have some money at home just to get by. So fear can do a lot of different things to people. Another issue affecting China is social unrest. Remember, China might be the 2nd largest economy in the world behind the United States, but its nominal GDP is ranked 59th in the world, right between Montenegro and Botswana. So the average income in China is actually right around $8,000 a year. So although it is the 2nd wealthiest country in the world, it is not a wealthy country when you take into account the mass population they have, which is about 4 times the population of the United States, for example. Now, all this social unrest, thousands of protests breaking out everywhere is causing a lot of pressure on the communist government, which wants to hold on to power. So what are they doing? They're trying to appease the people. They're going to lock down on all their big companies, take money away from the rich, increase the taxes, and give out more funds to people that need it or people that want to move up into the middle class. Factor number 2, probably the largest factor of our time and probably the factor that could cause a worldwide depression. China Evergrande, the second largest home builder in China, is in a liquidity crisis. So people are not putting their money into it. They're pulling all their money out. The government's regulating them. Their stock prices are going way down. They've lost a ton of money. In fact, they're not able to make their debt obligations. And 1.5 million Chinese people are going to lose at this time their deposits and probably never receive their homes that were being built for them. That number is expected to grow probably exponentially. What's going to happen with that? Again, over 1.5 million, so many more Chinese investors are going to lose their money. Their sentiment's going to drop. They're not going to want to travel. They're not going to want to buy stuff. It's going to affect all over the world. That could turn into a Lehman Brothers like we had in 2008 and cause a worldwide recession. Now, I'm not so sure that it'll happen that way just because the United States and other federal reserves have gone really smart and they learned a lot of new strategies. In fact, during the coronavirus, they've created over 70% of all the money that's ever been created in humans' history has been created in the last year. So what do we do when we get in problems? Just print money like crazy. Now, it does lead to inflation, but it's a coordinated effort. Most of the central banks in Europe and everywhere else are doing the same thing. So it kind of offsets each other. It's an interesting thing that they're doing and they've never done it before. And it's been effective. It's worked. So I don't see this going into a depression just because they know how to stave it off. But it could cause a lot of problems. One of the things that Trump did while he was in office was he inflicted a lot of damage to China with his tariffs, and it caused a bit of uncoupling where US companies and other big multinational companies started moving out of China to other places. The benefit of that is with this Evergrande issue, a lot of the problems they're going to have are going to be contained within their country. Now, that doesn't mean it's not going to scare investors in other countries and affect stock markets around the world. It is. And there's probably going to be a crash or a major correction because of it. But this issue's been going on for about 2 months. I've been following it day by day. I've been mentioning to a lot of my colleagues and they're saying, yeah, this thing is kind of going under the radar, but it's a huge deal. They're expecting China to not help, but I disagree. I think China is going to have to come in and bail out this big mortgage company because otherwise it could cause a total meltdown of their economy. It's very problematic. It could cause a lot more social unrest and a lot of ambiguity in terms of for investors and consumers in their country. Now, those are the 2 major issues facing China and the world right now. Now, we got 2 more issues and they have to do with the United States. Now, the first one is there's a lot of issues in the United States in terms of social programs running out. There's the eviction moratorium is running out. The mortgage forbearance program to help people that have not been able to make their payments during coronavirus is coming to an end. Enhanced unemployment benefits are being given out to pretty much a large portion of the population here ran out on September 4th. And there's a lot of issues in terms of liquidity. A lot of people are going to have a lot less money. A lot of people are still not working. And we're facing high inflation right now. So people's purchasing power is going to fall off a cliff. I think you're going to see in this 3rd quarter GDP number, even the 4th quarter, it's going to be huge. It's going to hit us around the holidays. People are going to have a lot less purchasing power. They're just not going to be buying stuff. Prices are high for everything. Their money is not buying as much and they're not getting all this support from the government. It just makes sense. There isn't as much money in the economy circulating. In fact, I think that's one of the things that's also affecting a lot of cryptocurrencies. You've seen a correction in cryptocurrencies. A lot of them are going down. Well, it's because a lot of the young people that were getting unemployment and all this stimulus money don't have all this extra money anymore to waste frivolously. So they're pulling it out of their cryptos and they're putting it back into, buying food, paying rent, all the necessities and stuff. And I think that's why you're seeing this big correction, with the fact that China's locking down on cryptos, India's already blocked them, and many other countries are starting to regulate them precipitously. Obviously, there's still a lot of news about El Salvador, but El Salvador economically is a speck of a country, although they're using Bitcoin for everyday legal tender now. That's great for them, but it's not a good strategy overall, in my opinion. Too much volatility. They're better off being dollarized. It costs more stability for their economy. Now let's go into factor number 4. So factor number 4 is probably the biggest and the biggest unknown. Who knows what's going to happen with coronavirus? In my opinion, and most of my medical professional friends, we're just at the beginning of this. It's escalating really fast. It's mutating much faster than we thought. Initially, we thought we were going to need a shot every 3 years. It was going to be like a lazier version of the flu. It's not. It's mutating much faster. Delta coronavirus is doing a lot of damage around the world. And deaths from it are actually declining, but that's because most of the people in the Western Hemisphere are in summer right now. So there's less flus and respiratory infections being passed around right now. We're on the precipice of going into our winter, which is in the next month. So we're expecting some new variants to come up and possibly a lot more damage. Who knows? We don't know what's going to happen. Hopefully our vaccines will hold out. Hopefully people will continue to get vaccinated. That'll have a big impact on that. And as long as people are just able to stay healthy, economies will grow out of this pit that we're in right now. If they don't, and people get sick again, well, it's going to cause a lot of issues because governments are out of firepower. They've given out way too much money. I don't see how they can just keep giving away money forever. They're going to have to start buckling down and take the brunt of this. And I think this could cause a lot of issues like it did the Depression. So let's keep an eye out and see what happens in the winter of 2021. And let's hope that we make it to next summer with no new variants or anything that's significant enough to cause lockdowns or any other health crises around the world. And in summary, just keep your eye out for those 4 major factors I mentioned: economics, the environment, health, and geopolitics. And that's going to help you figure out what exactly is going to happen with your finances, which way the wind is blowing. Right now, things are looking good. A lot of people want to invest. Countries are looking to help their people invest. They can grow their economies out of this rut that we're in because of the coronavirus. But there's all these headwinds we're facing. So keep an eye on Evergrande, coronavirus, and again, political strategies on how to address unrest in countries. So thank you again for listening. And from Los Angeles, California, this is Dr. Ernesto Martinez. Thank you and goodbye.